And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you from a lovely little Westlake Village, California. It's a bit gloomy out today, and Bitcoin putting in a bounce alongside the dollar, pulling back here. And I think it's a good time to follow up on some of the higher term timeframes for Bitcoin and for the dollar, and some of the altcoins as well. We'll cover some of the relevant economic data that's going to be coming out, and, well, the debt ceiling debate, which is pretty high scrutiny, as that is coming up here relatively soon. And what did Janet Yellen have to say? Well, here she goes.
The 14th Amendment, the idea there that was discussed is that possibly that amendment would justify just issuing debt sufficient to pay all the government's bills and ignore the debt ceiling. And what President Biden said in his remarks is it's really not, there would clearly be litigation around that. It's not a short-run solution. And what I would say, it's legally questionable whether or not that's a viable strategy.
So Janet Yellen talking about raising the debt ceiling no matter what, and everybody pretty much has the same conclusion that they're going to raise the debt ceiling. So what else do we have on the board? The Group of Seven Summit takes place this week in Japan. So U.S. and the allies are going to reject, kind of make a statement that they don't approve of China's economic relation policies. They don't approve of Beijing kind of coercing other countries to act as though they disapprove of the dollar. And what else? U.S. consumer sentiment tumbled to its lowest levels in 6 months. The drop was driven by concerns over the debt ceiling, triggering a recession, and longer-term inflation expectations also rose the highest level since 2011. All right, let's get into, I'm going to start it off with the dollar here, as we are having volatility expansion and momentum to the upside. Even with our bias that when the dollar goes up, risk assets go down, that has been the current trend. However, that doesn't always necessarily prove to be the norm, as well, the dollar rally started in January 2021. Back here, where was it? January 21, that's June, April. So January 21, dollar hits a major low, rallies to the moon. And what did Bitcoin do back then? Well, all you got to do is get your little calendar out, and let's take a look at January of 21. Yep. So, Bitcoin continued to rally pretty significantly. So it doesn't always play that way. But as for the moment, that has been the case. As the dollar has come down today, Bitcoin has seen a bit of a rally on the daily time frame. I'm going to talk about potential targets for this rally. Basically, we are either going to reject from this level at, call it 28,000 or 28,300, this prior wick back here, so pretty much the game is lower, high, or not. Now we have the daily downtrend established, producing a lower low, lower high, and now another lower low. So the great old saying, don't fight the daily downtrend, should hold true here. And so where could potential bounces come up? So anywhere around the 618, as long as we were below that 28,300 level, then pressure is still going to be on to the downside. However, momentum did cross to the upside from a pretty low level. Volatility looks like it's about to start curling back down. And we're potentially rejecting the bearish control zone if we can get out of this level right there. And do we have any drives of hidden bullish divergence? Well, I would say so. maybe 2 drives there gets you a shot to the 21, which is coming in at 27,983. At the very least, I am suspecting a bit of a bounce on the shorter term time frames after perhaps a rejection off the green 55 on the 4-hour time frame. We've been away from the bullish control zone on the 4-hour for a bit of time. Essentially what I'd be looking for on the 4-hour is a closure above 27.5 for continuation up to that purple 200. Otherwise, what I see as a potential in the short term is something like this, where we come back in and test this trend line. So after rejecting the green 55, how would you confirm a rejection? Well, any kind of a closure back below 27.1 should get you a move back down on a bearish retracement down to that 618 level at 26.5. As long as we're above 26.5 on the 4-hour, you're going to have pressure to the upside. However, 27.5 is the pivot to cross down. If you do see the 4-hour get out of the critical zone and start coming back down, probably going to initiate that move down to test this trend line. And again, kind of rounding it all up here for the daily time frame. In my opinion, there really isn't a lot of bullish divergence unless you're looking back from this kind of low right here on a candle closing basis. Yes, you would have 1, 2, 3 drives, which could get you a shot to the top side of the range. I mean, all the way up here. But pretty much as long as we are below that 618 fib at 28.3, I am suspecting a flush down. Why? Well, the higher term time frames, like the 2-day momentum, is still to the downside. We'll cross up today above 26.8, and that'll be your first warning sign. If we do see the 2-day momentum cross back to the upside above 27.8, first warning sign that, yes, we're probably going to play a little more upside from this level. And then the 3-day momentum is still to the downside below 29,000, and volatility is just beginning to expand. But again, expansion we define as above 25%, which should catch the next 30% move. So oddly enough, let's say we get above, if momentum crosses to the upside as volatility begins to expand, you'd expect price to go up, and a 30% move from where we're at right now. Where would that take us? 30%, probably up to the $35,000 target. Yeah, about 35,000, which is, definitely in the cards. We have low liquidity right now. So you expect a lot of volatility in these times right now. Where, there's, a little bit of money can move the market significantly. 4-day time frame still does give me the bias for a downside move down to about 25,000. You do want to see the 4-day close below this yellow 21. We got another day and 6 hours. So essentially what we want to see, in my opinion, is for the dollar to continue onwards and upwards and confirm some of that hidden bullish divergence where price is making higher lows and the RSI is making significantly lower lows. So you got higher lows in price, lower lows in RSI coming back from this pivot right here. Call it maybe, 1, 2, 3 shot to the green 55 is definitely in the cards for me. So what we'd want to see is, again, we're kind of doing the same thing here on Bitcoin. We had this daily range, right? Daily range for Bitcoin on the day. You could almost call it, that was the range. So we broke the range. You want to come back, retest it, and then continue onwards and upwards towards that purple 200. Where does momentum flip back around? Well, probably, it says 101.44. So all the way down here. So a lot of work to do if the dollar is going to flip momentum back to the downside. If we do see that, that would be your indicator that Bitcoin is very likely going to take the upside route up to about 35,000. In the same sense, as I was saying, so you break the range, right? You come back, test it, and then continue upwards. Well, Bitcoin did the same thing on the daily time frame here. We broke the range. Let's say right here. And we came back for the retest and producing a bit of a cup and handle. Essentially, we want to see Bitcoin, continue to the downside over the next couple of days if we're going to get the downside move in the short term. If not, a bounce is more likely than not. And a lot of the lower term time frames, like the 12-hour momentum, is to the upside. As long as we're above 26.5, the 4-hour is still up right now. And what does the hourly say? The hourly is getting kicked out of the critical zone and coming down, and we're having a bit of a volatility reset. Also to note, on CMEs, there is a bit of a gap fill. So I would not be surprised for Bitcoin to come back down and fill that gap at some point, and then try for the upside move after we have played out a pretty nice bounce here from the lows. We were calling for 25,000 last week. We got to 25.8. The saying, close enough is close enough, but patience does reward people in cryptocurrency land, in my experience. And the 2-hour is just beginning to melt down. Also, noting the 6-hour volatility is beginning to decline, specifically on the spot price action, and implying a bit of a rejection off of that green 55. So, the question is lower high or not, I think, on the daily time frame. Where does this next high form, and is there going to be some kind of an economic catalyst over the next couple of days? Again, this week, what do we have coming up on the economic calendar? Retail sales Tuesday, building permits Wednesday, jobless claims on Thursday. And as today was a bit of a nothing burger for economic data, really on the calendar here, there was nothing. Nothing on Monday after Mother's Day. So no red here in the high economic data, except for the Chinese unemployment rate, but that's not United States. Also note, unemployment in China is at 5.3%. Great Britain, we've got 3.8% unemployment. And they're talking about double-digit inflation coming to Great Britain here soon. So next thing up is retail sales, and that's these are likely going to affect the dollar if they come out higher than expected, showing what the PAL is not doing. What PAL is doing is not working. Well, essentially the dollar should continue onwards and upwards for that little rally. And we should see that next lower high form for Bitcoin. But to be fair, I do suspect that Bitcoin does bounce a little bit more from here. What am I talking about? Maybe another 3%, 4% maybe to the top side of this descending triangle. And again, if the 4-hour kind of downside move is going to play out, well, I'd expect price to come back down, test this trend line maybe around 26.7, and then put in a higher low, as we did kind of break this trend line here, but we're still making lower highs and lower lows. So still goosing the odds in the favor of the bears, but short-term bounce probably in the cards here, somewhere around 28.3, and then the question is lower high or not for Bitcoin. Ethereum holding up quite well and following up on that kind of head and shoulders formation that we talked about for some time, giving us targets all the way up to about 2,300, 2,400 on Ethereum. We just said we didn't want to see the left shoulder break. Well, the left shoulder has not broken, and if the trend is going to continue, you can see the same lower low, lower high. So it's either going to be a bull trap or a bear trap here. Bear trap, well, we reverse in our faces and, start clearing back above the 2,000 an ounce, 2,000 an ounce. Speaking of that, let's check in on gold really quick. And what is gold doing? Gold, following up my thought on Ethereum, same kind of situation here, is you just don't want to see any closures back above, that pivot at 1,991, daily closure back above there, and bit of a bear trap, and probably going to head a bit higher up to that $2,400 target that we have. Lastly, so that's it. Back below 1750 on Ethereum, and I think this one, probably going to have a bit of a failure there. Bit of a failure. How's ETH Bitcoin doing? ETH Bitcoin looks like it is coming back down. So not good for altcoins. ETH Bitcoin momentum is crossed down. Volatility is declining, having a bit of a reset. So not ready to call that one yet. How's our PP coin doing? Well, rejecting right at the box of peace and prosperity that we talked about. After playing out the downside move to the 21, you get a lower high, and I suspect this one does come down further over time, but back above the green box, then, it's peace and prosperity for Mr. Pepe coin. How's Doggy coin doing? Doggy coin looks like it wants to bounce the rest of the market, and it's just, where does a weak bounce come in? It comes up to the 382. Where am I ready to get bullish on this one again? I would say back above 81 cents, and probably going to have, a leg back to the top side of the range. But this one, it's lower, high, or not. And that's it for Mr. Doggy coin. Any other coins? We talked about gold. Gold target down off the weekly. Was it the weekly or the 2-day? I believe it was the daily, in fact. Daily is printing several drives of hidden bearish divergence with a target down to that 1618 fib. What is hidden bearish divergence? This is regular bearish divergence. Prices making higher highs and the RSI is making lower highs, giving us a target. So again, if we mark these off, just a brief little tutorial. We got from this high, we got 1, 2, 3, 4 drives. 4 drives technically gives you that shot to the 1618 fib. Actually, this would be your 5th drive. But where can you put that target? So shorter term, looking for a targeted move down to 1969. Right, first target there, and then the question is lower, high, or not. And if you wanted to have a bit of a deeper target, which I think would be healthy for gold, I'd be targeting a move down to this level and probably picking it up from there. Does that line up with anything else? Yeah, the 2-day right there. So any kind of a 2-day closure back below this wick, coming in right here at 1999 or 2000 an ounce. Gold has just been relatively strong in the light of inflation fears, banking collapses. Gold is the oldest form of money in the world. JP Morgan, great quote. The only real money is gold. Everything else is just credit. And I think that has held true for the last 100 years. Silver, a little bit deeper target down. I don't know why I have this green box in, but I am going to note that, let's see. Is this a lower high? Yes, it is. 2 lower highs there. Okay. So that's our pivot. I mean, back above here, silver's going to rally to the, probably the top side of the range at $28 or 30. But right now you've got 1, 2, 3, sorry, 1, call it 2, 3, 4, 1618 fib, and the target down for this one just a little bit lower. First target down is right there. So a little bit further down, and I'd suspect a bit of a bounce off of that level. And yeah, let's check in lastly on the dollar, and I think this one will give it away, really, is back below the 618 right here. So this is the line in the sand for the dollar. Back below there, party on for risk assets. And as long as we are above there, above, you know, even the 0.5 at 101.88, call it 102. Remember, dollar volatility was compressed for a very, very long time, and now we're just getting expansion. We're not above 25%, but we're close enough is close enough. And I would suspect tomorrow, if retail sales comes in bearish, then, and again, retail sales, the expectation is 0.2%. So giving us a little leeway there. Retail sales year over year, the little red book, month over month, X auto. So they are expecting retail sales to come in higher than the previous month. I wonder why it was down so much the month prior. But anything higher than that implies, well, people are buying more stuff. There's more inflation, not good for what Powell is trying to accomplish. With that, I went a little bit long today. So thanks for sticking in there, guys. I hope you get a chance to tickle the bell and subscribe if you enjoyed some of the content. Definitely do that. And with that, have a blessed and highly favored day. I will see you all tomorrow. Take care.